Let's face it, crafting your own trading strategy can be a daunting task. There are thousands of different indicators, thousands of different trading styles. Everyone seems to have an opinion. And then as traders, we tend to overcomplicate things. We tend to throw on too many indicators or overanalyze a stock or a crypto to the point that we miss an entry and we don't execute. And then we maybe get a late entry and fail. I'm here today to show you a simple trading strategy using three indicators, three powerful indicators. They're all free to net you profits. How do I know these trading strategies work? Well, because they work for me. Most recently in September, I posted my recent 30-day P&L of $435,000. I am an open book. I post my P&L in our Discord trading clan all the time. I post my wins and my trades and my losses as well. First thing we're going to do is set up the indicators. So what I want you to do is hit your object tree. It looks like TradingView has had an update, so it is now in the upper right-hand corner. If you see where my mouse is up here, click object tree. Hit this, hide all your indicators. So hit the I on everything. Don't have any indicators on. I want you just looking at a blank chart right now. The first indicator we are going to set up is the divergences for many indicators. So if you just click on indicators at the top, type in divergence for many. It's right there. Lonesome, it's the one that has 18,065 downloads. Go ahead and favorite it. Throw it onto your chart. Now, it might look a little bit different than mine in the beginning, but that's okay. We're going to set it up quickly. Then do me a favor, pause the video, rewind, do what you need to do to follow along with me. This is going to be a killer trading strategy. Once it is on your chart, go ahead and double click it in the object tree. And then you can, I don't think I change anything here, but we're going to go over to inputs. And I want you to copy these exactly. So pivot period 5, source for pivot points closed, divergence type, make sure you have regular/hidden checked. Show indicator names. Those just muddy up the chart. We don't need to know those. So hit don't show. Minimum number of divergences 1, maximum pivot points to check 10, maximum bars to check 100. And then you should have it from the top to the bottom here. It should be checked, unchecked, unchecked, check, uncheck, and then check the rest minus the last one. And then you can change these colors around if you want. Make sure the external indicator is set to close. You can just pause this and then just compare it to yours on your screen, right? I change my colors a little bit. You can change yours if you want. Regular divergence line style solid, hidden divergence line style dashed, then 2 and 1 in the following boxes. And we're not going to worry about the MAs of the 50 and the 200. Under style, I don't believe I changed any of these, but double check. And then what you want to do is save that as default in the bottom and then hit OK. Once it is on your chart, go ahead and double click it in the object tree. And then you can, I don't think I change anything here, but we're going to go over to inputs. And I want you to copy these exactly. So pivot period 5, source for pivot points closed, divergence type, make sure you have regular/hidden checked. Show indicator names. Those just muddy up the chart. We don't need to know those. So hit don't show. Minimum number of divergences 1, maximum pivot points to check 10, maximum bars to check 100. And then you should have it from the top to the bottom here. It should be checked, unchecked, unchecked, check, uncheck, and then check the rest minus the last one. And then you can change these colors around if you want. Make sure the external indicator is set to close. You can just pause this and then just compare it to yours on your screen, right? I change my colors a little bit. You can change yours if you want. Regular divergence line style solid, hidden divergence line style dashed, then 2 and 1 in the following boxes. And we're not going to worry about the MAs of the 50 and the 200. Under style, I don't believe I changed any of these, but double check. And then what you want to do is save that as default in the bottom and then hit OK. And then that's it. Your chart should now look similar to mine. Maybe the colors are a little bit different, but it should look like mine. So we got the divergence names off there. So we just know how many divergences are on there. Okay, indicator number 1 down. Let's go ahead and hit the little I. Let's get that indicator off. Make sure you're saving often too, guys. Make sure you hit that save button. Next one I want you to get is the mean reversion channel. So mean reversion, I'm sure it'll pop up there. There you go. Faird's MRI variant. Go ahead and favorite it, click it, throw it onto your chart. And it's going to look a little bit different than mine color-wise, but it might look pretty similar. I'm going to be honest, I don't remember exactly what I changed here. So go ahead and pause it and just copy these. So price source, we want it to be closed. Filter type, EMA, look back period 200. 2.415 chart setting. check the draw channel, draw zone width channel, 60 for transparency, display line immersion checked, enable multiple time frame analysis checked, and then on hover auto. And then here you go. This is the custom MTF level on 1 and 2. You want to select this for whatever time frame you are trading. This is important. Again, if you're going to be trading on a 15-minute chart, make this be 15 minutes. If you work a 9 to 5 and you're going to be trading on the 4-hour chart, and that's the chart that you're going to use, select 4 hours, etc., etc. You want to change this based off of what chart you're trading. This part is important. Next, we're going to go over to style, and you're going to want to switch only on the R2 and the S2. Turn everything else off. You only want the R2 and the S2 turned on. Down here, I don't know, for crypto, this isn't going to be as important because crypto is more volatile. But I did change the colors a little bit. I went with my kind of channel color scheme, which is like the Bitcoin colors, the Bitcoin gray and the Bitcoin orange. You just alternate them, right? So it's your, you can actually turn them off and on to see where the colors are. And we'll get into why. And you can adjust the colors later as well. But, you kind of want to stagger them, right? So this is 100% for the top color, for the bottom color down here, 100%. Then I kind of drop it, 45%, 20%, and then 15%. So it kind of fades out a little bit, if that makes sense. And then I'll kind of just scroll up and down this thing again, so you can kind of pause it and get what I did. Show it one more time here, and then this indicator is set up. And just because I don't know if I explained myself properly, but again, you can unclick it to see where the colors are. You see how it disappeared up top on the bottom. So it alternates, right? So you got your top color up here, bottom color, top color, bottom color, top color, bottom color, and you can unclick them to see where they are. I just like to fade them, and I like to be able to see a little bit of difference between each line. And this will make more sense when I go over the actual strategy for these indicators in a little bit here. Make sure you guys are saving as default too. So go back into it, hit save as default, and hit OK, and then hit save every time. So this indicator is set up. We're going to go ahead and hit this I on the object tree up there, get rid of it. The next one we're going to throw on there is the EMA Ribbon by Crypt. So make sure it's this one right here. Go ahead and favorite it, throw it onto your chart, and let's get it turned on. It's going to look a little bit different than mine, probably, to start. Once that's on there, go ahead and double click it on the object tree. Now there are two main EMAs that we're worried about here. The first one is your MA1 and your MA3. Now it doesn't matter which one of these you have selected here because you can switch the inputs, right? But it's the 13 exponential moving average and then the 50 exponential moving average. That's what you want turned on. So whatever you have selected under style, make them correspond. So mine's MA1 and MA3, and I have the 13 and the 50 selected there for those. I like to have my MA1 be white, and I like to have my MA3 be yellow. That's just my personal preference, but you need to know the differences between these MAs once we get into the strategy because it's going to be important. Now, if you want, because there's the 5, the 8, and the 13 is a trading strategy, right, for the EMAs. I personally turned on the 8 and the 5 as well. You can see here the 5 and the 8. Just to have a little bit of extra confluence to my trades and maybe get a little bit of a warning when the price could be changing before the 13 moving average. So I'm just you can pause this, set it up exactly how I have it, source close, 1 here, and then I'm going to show the style real quick for what I have. You got to know the moving averages and the colors, so set them up to your own color scheme, precision to default. And babies, that's it. So now you have all 3 indicators set up. Go ahead to your object tree, turn all 3 indicators on, and it should look like this. If it doesn't, there's timestamps down below. Go watch that you have it set up properly. So let's just real quick give you a brief detail of what these indicators are to help you understand them. So the first thing you can do if you want to read more on them is just right click on the indicator over here and then go to about this script, and it'll actually give you all the details. It's probably a good idea to maybe read a little bit about what they are. So the first one we're going to talk about is the EMAs, which are these bands here. They're a smoothed out moving average of the price to help give you an idea of which way the price is headed. The 2 main ones we are paying attention to on my chart here are the 13, which is the white, and the 50, which is the yellow. There's exponential and simple or just regular moving averages. Regular moving averages, or MAs, are the moving average of the period selected. So the 13, which is the white here, is 13 candles on the chart you're looking at. The 50 is 50 candles on the chart you're looking at. So the difference between the regular moving averages and EMAs, EMAs give more weight to current price action. Moving averages, regular moving averages, give the same weight to the entire band. So 50 moving averages, if you go to the current price candle, you count 50 back. It is the smoothed out moving average with given a little bit more weight to the current price of the candles on your chart. So the mean reversion essentially is letting you know weak overbought, and then strong overbought when you're outside of the ribbon, and then oversold, weak oversold, and strong oversold when you're outside. So the point of this, and the Divergences indicator uses this is why it's on here, but mean reversion channel objective. So based on the mean reversion theory is that everything has a tendency to revert back to its mean. It's helped at visualizing, right? So the interchannel dynamic support and resistance, overbought, oversold zones. You can read all this for yourself. But essentially, we're using this as an overbought and oversold or potential reversal zones. Outside here is strong overbought. Down here, strong oversold. You are regular oversold here, and you're kind of a weak here, and then so on, so forth. That's what this channel is. And lastly, the divergences for many indicator, pretty self-explanatory. It's just pulling multiple divergences from multiple external indicators. RSI, MACD, VW and MACD, the OBV, right? Order block variance, momentum, money flow, etc., etc. So down below, these are bullish divergences. Up top, these are bearish divergences. The white ones on my chart are hidden. So down below here, these are hidden bullish divergences. Up top, hidden bearish divergences. The solid colors are the regular. So this is a regular bullish, a regular bearish. Typically when they print, the price moves down. When you're up top here, when it's a bearish divergence, bullish divergence, price moves up. All right, let's talk trading strategy. Let's tell you how to buy and sell using these three indicators. The point of having three indicators on here is to find confluence. We want to use them all in conjunction with each other. So we can see here, we had 5 hidden bullish divergences. Now, typically speaking, if you didn't have any other indicators on here, you would think to yourself, oh my God, that's a lot and price is going to go up. However, the exponential moving average, so this is the 13, is headed down. So if I click on this to highlight, you can see it's heading down. That's not a good entry. That's not confluence. Those are like crossing each other out. So while this particular candle shot up, a little bit, not much, $30, $40, that's not a trade we want to take, especially on a 15-minute time frame chart. The momentum is still to the downside. So sometimes you can get a false positive on individual candles themselves. So while this printed bullishly, the momentum is still coming down. So that is not a trade we want to take. Let's analyze this one instead. So we can see we had 3 regular divergences print on this candle here. However, the price, if we look back, is still heading down. Even though we had a little uptick here, I'm still not ready to take that based on the momentum to the downside. It's going to take more confluence for me to enter into this position. This doesn't mean that this is canceled out yet because the price is still in the same zone. So it ticked up a little bit, went down, and then the tick up happened. So we had, this is the 5 and the 8 moving average crossed over the 13 here. So this would have probably been a decent entry right here, right at that crossover. And we can see that it was. I mean, it played out. So this is where these 3 bullish divergences played out. So your entry is right there. Your stop loss goes below these wicks. So you enter into your position here and your stop loss is below the wicks. Obviously, this worked out and that worked out great. Then you kind of just trail it with your stop loss. We can see we're getting into the reversal zone here, and it did. It played out. So you take what the market's given you. In this case, this particular trade would have netted you, we'll call it conservatively, maybe hit your stop loss 1%. If you're 20 times leverage, that's 20%. If you're 5 times leverage, that's 5% on a 15-minute chart. Dude, that's huge. That's huge. All bets are off. When you have super volatile candles, you got to just kind of wait, right? Like you would not want to enter on this candle, obviously, because you wouldn't want to enter a short because the momentum is still to the top side till you get that cross right here. So we had some bearish divergences print. You'd take your entry there, and obviously that played out. So you want to enter into your trade after you see divergences print, and then making sure that the momentum on these EMAs are in your favor. More confluence when you're in this overbought zone. So that's like 3 confluences in one. The only thing I will say is just be careful. Maybe sit it out when it is super volatile like this, because who knows what's going to happen. When it's very, very volatile, all bets are off. All indicators, everything is off during high volatility. I mean, some exchanges, right? KuCoin will even like shut their exchanges down during high volatility, which is insane to me. So just be careful when it is high volatility. Just remember, it'll calm down and start trading regularly again. Let's just quickly backtest a couple of these, and then I implore you to backtest these on your own. Then I want to show you a higher time frame and then probably wrap up the video. So we got 3 bearish hidden divergences printed right here, and then the price starts turning down, right? We even get a cross here. So that's a good entry. I mean, really anywhere in here is a good entry. Probably would have netted you another percent. So here we had 5 bearish divergences print, but the momentum on this white, and remember the white's the main one we're paying attention to, but we're paying, a little bit attention to the 5 and the 8 as well. So the momentum though is still heading up. So that's not a good entry. That's not a good entry because the momentum is against you. You want to trade with the markets and the momentum of the markets, not against it. And that's why we use moving averages. So here you can see we had one regular divergence print, right, on this red candle. We can see it kind of bottom and started turning. So that's a good entry right there. And we can see what probably netted you. I mean, you would probably wrote it up to here. I don't know if that's a percent or 2. I'm not going to measure it, but you get kind of the point or the picture there. Let's take this one here, for example. So we had one hidden bullish divergence print. And we can see that the momentum was already on our way up. Now these bands are starting to separate a little bit, showing potential even more upside. So that was a good entry right there. But you also got to kind of keep in mind here that it was after a lot of volatility. I would have probably not taken that trade based off of, this was that crazy fake news ETF approval day, if you guys remember that. So I would probably just sat that one out. Let's go to before that to kind of see. And when you get tight in the channel like this, you might want to just kind of sit out and wait for some movement. When the channels collapse like this, there's not a lot going on. We got to go back farther to even see it, to get something that's not right. But let's look at it in reverse, right? So here we go. When I say reverse, I mean we're down here into the oversold zone. So here we had a 5 regular bearish divergences print, but the price is flat, right? I'm not taking that trade, as opposed to here 4 printed, and then it starts to kind of come down. I'm taking that trade, and obviously that one worked out a lot better than this one did. I mean, this one could have netted you a little bit here, but whether or not you would have gotten your stop loss into the green before you got stomped out, it's a whole nother story. This was the better trade because we can see the crossover on the EMAs happen. We can see the downturn. It's obvious there. Upturn here, probably wouldn't have taken this trade right here, even though it was slightly, I would have. So this is the 15-minute chart. Let's look at a higher time frame chart. Remember, so let's go to the 4-hour, and then let's go, remember, we got to change the mean reversion channel to 4 hours, right? So 4 hours. Remember, this has to be changed to what time frame you're trading. So let's kind of zoom in here and let's find out how this plays. So let's take this one as an example. Let's just replay this a little bit here. So let's go to this candle right here. So a couple things happen. Let's wait for it to populate here. There we go. So there was a bearish print here, but the price is moving up. I'm not taking that, obviously, right? I mean, I'm not trading against the market momentum. I'm not trying to time something, right? Or I'm not trying to predict the future or have a crystal ball. I'm following the indicators and sticking to the plan. I'm not taking that because the lines are moving up. I'm not trading against the market. Let's go to the next candle here. We can see it printed 7 here, but look, we're getting a cross over the 50 moving average, which is bullish. I'm not taking that. Let's go to the next one, right? I'm not taking this one, even though it's printing there as well, because the price is moving to the top side. Let's go to the next one. Right? You would have been wrecked if you took if you took this short position here. I mean, look at that wick right there, right? I mean, this is Monday's crazy fake news, right? I think, yeah. So I'm not taking that either. So I just want to show you don't trade against the trend. You trade with the trend. Remember, this is the 4-hour chart, so you're gonna be in these plays longer. This isn't a 15-minute chart. It's gonna net you a higher percentage, but you're in them longer. Let's take this one for example. So we're getting up into the reversal zone here. We have a regular bearish divergence print, but we're not taking it on this candle because the momentum is with the bulls. We should continue up, right? But we're starting to get oversold. We're getting that print. We're not taking it on in this candle because if you did, depending on where you entered, this wicked you out right there. So we're waiting for that plateau, and then we're seeing these moving averages start to come down. We want to take an entry on this candle, into somewhere into this downturn with our wick, our stop loss above the wick. So obviously this one netted you probably a pretty decent. I mean, if we even just come down to here, it's like 3.5%, 5 times leverage, that's 15%. You would have been in that for, a couple days, something like that. You would have been stomped out somewhere around here, well into the green. And we have multiple confluences with divergence printing, right? We were in this kind of weak overbought zone here, and then we started to see that downturn. That's where we take our entry and place our stop loss above the previous wick. And we can see on this one here, we got 2 divergence prints. So you got to remember, when you see the divergence, it's from the previous candle is the actual divergence, right? So you can see the connection here. So this candle was the actual divergence. This candle is the one where it's supposed to play out. And we can see we got the little uptick there. Probably a pretty good entry area right there. Stop loss would go below like the recent low wick. So, your stop loss would go right there. And obviously it never hit it. And then if you would have stayed in this, all the way up to the top here and just kind of, slowly trailed it with your stop loss or whatever, it would have netted you. I mean, let's just say you entered there and you got out somewhere right there, 3.5%. I mean, that's nothing to sneeze at, right? You got 6 divergences printed here on this candle. And then we start to see the downturn here. So you enter into your position somewhere around here. Your stop loss goes above the recent wicks, so you can play it safe right there. And then if you would have rolled this down, let's just say you entered right there, right? I mean, that would have been huge. I mean, that's 5%. I mean, I'll take those all day long. So some pieces of advice. The first one is take what the markets give you. A win is a win. Take your W, wait for the next play. My goal as a trader is to get my stop loss into the green as quickly as possible while still giving myself enough wiggle room in case of some pullback or, a little bit of a retest. Now, that being said, once you're into the green, you can play your stop losses a little bit more conservative or liberally if you want, and not necessarily trail it as hard on these higher time frames. On smaller time frames, 15-minute, 5-minute, you got to play them pretty tight, right? Because the price moves differently. It moves quicker, right? I mean, 15-minute time frames like this, where the 4-hour time frame, I mean, that's like a week right there, right? Next piece of advice is to backtest. Any new indicator, any new strategy, you need to backtest so you understand how these indicators flow with each other. If you're just gonna watch this video, set up the indicators, and take a trade right away, you're probably gonna fail, right? You need to backtest. You need to use this replay button, cancel it out, and then just let it play for a while. And when you see a divergence print, pay attention to these moving averages, and then paper trade it. And then just hit play and see if it worked out in your favor. You need to do that. That's the most important thing I can tell you here, so you can understand how these work in conjunction with each other. Next thing, set alerts. Set alerts, set alerts, set alerts. They are your friend. So if you go to the divergences for many indicators here in the object tree, you right click it and you hit add alert. I do it on every single divergence here, and you got to do it 6 times, right? So negative divergence detected, I want that alert, and I want it to be open-ended, right? I never want it to stop. I want it to always be there. Hit create. You go back into it, add alert, and we're doing the second one down. We're going to do open-ended, hit create. We're going to do it again for the third one down, open-ended, hit create, and we're going to finish this off for every single one. And then I was just finished setting them up, and I was just watching this. 5 regular divergences printed, but price is still heading down. You're probably going to get stopped out here. So just because it's printing a divergence doesn't mean it's going to head in that direction, at least right away. We want to see that uptick in these EMA bands, because for now, we would be trading against the trend. Once you have your alert set though, anytime my divergence prints, you're going to get an alert however you have it set up. So mine, I get it notified on my app on my phone. It's going to show a pop-up right down here, and it's also going to send me an email. I don't necessarily have to just sit here and stare at this chart. I can be playing a game in another screen or watching some podcast somewhere else and then get the alerts as they're breaking off. 99% of trading is waiting. I promise you it is. This is a very powerful trading strategy. Just to wrap this video up, do not fight the trend though. If the trend is down, you're not taking a long position. You are just waiting for that uptick. If you want, you can throw in other indicators like money flow, like market cipher B, like some of these other indicators we've talked about on this channel, but don't overcomplicate it. This trading strategy works if you stick to the plan, you have patience, you have discipline, and you follow through with the execution and the proper stop losses. Remember, your stop losses go below. I mean, really, you want to use like up to 5 candles. So if you're going to enter into a long here, if we start to see a tick up, it's going to be below this candle for a stop loss. So we're starting to see a tick up here now. Probably would be looking for an entry if I wasn't sitting here making a video and focusing on getting this out for you guys. But that's the video in a nutshell. I would appreciate it if you guys could toss me a subscription, thumbs up the video, turn notifications. And then if you have any questions on this, or you want some one-on-one time, want to hop into a voice chat, hop in Discord, discord.gg/alpha Aere. I'd be more than happy to walk you through this, some more, answer any questions you might have, talk about anything. But small, tight-knit community where I'm posting the alpha. I'm going to be honest with you, most influencers who are doing this are charging hundreds of dollars a month for their Discord. I'm not doing this to make money. I'm doing it to make you a better trader, to in turn make myself a better trader. So hop on in Discord, discord.gg/alpha Aere. I promise you won't be disappointed. Joining the community is an integral part of being in crypto. So give me a shot. Appreciate you guys, and we'll see you for the next one. I hope you learned something from this.